Okay, hi folks. This is Mike Reed from tradestalker.com. I thought we'd go through a quick overview of the technical situation. This is done on Sunday, um, March the 10th. First off, we have a daily chart. Show you the daily chart first. Um, Sideways action with narrow ranges for five to 6 days in a row. Note the tails above here right at the resistance area. Um, So that's kind of a red flag. And Friday, the market finally had a little breakdown. I moved down to the next time frame. We'll look at the 60-minute chart and can see these tops had formed. These were what we had marked as key resistance areas above. They were tested several times and obviously rejected there and hard with some power here. This was a key support area and now resistance. And this area, 1323, we move on in one more time frame here. You can see Friday's action. Early high at that resistance area. Came down sideways, bounce, didn't stay over 1300, couldn't get back over it. And then when this support broke on Friday, they ran right down to just above what's a gap on the S&P daily chart, day session chart. So this is a look at the prices. Looks like we have a short-term top possibly in place here. To go with this, I'll go over to the my spreadsheet work. As I noted to our members, we had 5 straight days where the S&P 500 cash closed between 1335 and a half and 1332 and a half, basically. And Friday, they came out of the bottom of that on a closing basis. You can see here, so S&P 500 in red with Bollinger Bands. And as you can see, we came up here with a little less and less momentum sideways. Friday finally showed some kind of attempt to push to the bottom of what's the next step on the downside. What we got going on here is bigger picture. We have, you can see here, the bigger picture indicators, which had turned up. We're going up here for a while, had stalled out, and now have turned down. That's advanced decline indicator, and this is an intermediate term volume indicator where that just finally hooked down Thursday, Friday. Same with the, that's the bigger picture breadth internals. And we're not going to keep up. We're not confirming this kind of high or anything. And this rollover is the first indication of a crack in the bigger picture. Still, to get this rolled over PMO oscillator is not, obviously, did not get a nice steep move along with the prices. And it's close to rolling over. Also coming into this, one of the reasons we were pretty much avoiding longs, trading the short side the last week up against resistance was the sentiment picture. The VIX had given some sell signals last. That gave one on Thursday before the Friday slide. These others were kind of red flags after the run up and went nowhere. Okay, short term then, this is an intermediate term, starting to roll over intermediate term. Very short term, let me show you one more intermediate term. Sentiment here was the S&P VIX ratio. This is pretty good at catching extremes. In any case, the lows, bounce lows there. Spike below it, you got a little bounce there. Below it here, we got a little bounce here on the S&P in red. And down below it here was at the low, V bottom. Now it's come up to almost to the top of its 15% band and has turned down. It should attempt to come down to the moving average, the center point, revert to the mean. Bigger picture there. Short term, we are slightly oversold here. Let me see. I want to go to, before I come back to the sentiment here, I want to go to the, let this auto save here. Excel file, and it's got to do an auto save. Okay, we come back. Short term here. See, our RBI oscillator was on a sell signal just above, not quite to a extreme sell signal near the highs. Now it's modest oversold. I'm really looking at the moment, two things that are slightly oversold that could give us a bit of a sideways action if this doesn't break down through the 1317 area, is that this WCOM oscillator is pretty good at short-term bounces, and it's now below the band, not to an extreme on the downside, but I'd like to see it go a little deeper and then turn up before getting excited with that being oversold. One other here, let me show you the my RBI oscillator. Oh boy, second. There we go. My RBI oscillator. It's been such a tight range here. This was a buy. I'm sorry. This was a buy here. This was a sell up here. Right now is just below the bottom, and would need to turn up from here, or actually go a little bit deeper down. But it's been sideways for a long time, and pretty good on the bottoms and tops. But I'd like to see this oversold along with the 3-day thrust at the same time, and that has a ways to go yet before it gets oversold. So modest oversolds on short-term direction here. One other thing to mention on the short-term sentiment, as far as the VIX dropping really hard, you can see here with the 10, it was got up to over 30 on the dive down off the February high, and now as of Friday exactly had reverted to its mean. So it's right in neutral here at the moment. The RSI turned up from under 30, which was a sell signal. Also along the lines of sentiment here. At first, the put call ratio, they didn't put buyers, they just completely abandoned as far as wanting to buy protection on the downside, and now this could do some catching up. This internally breaks down, continues to break down on the intermediate term. So what do we have to look forward here? We have a gap to fill on the S&P cash from back. And on S&P futures, it's 1317 and 3/4 to 1317 and a quarter area. On the cash index, we are down between 1319.45 and 1321.89 on the cash. So they have to go down to 1319.45 on the cash to fill a gap on a daily chart. That's what's key. Below, on a retest of or slightly lower push through Friday's lows, we'll be getting down to what should be the next key area for the market to hold on this. Otherwise, more than just a pullback and an ongoing uptrend, I believe that will start to, if we start to get some closes under the 1317 area on the ES, that we should be breaking down. So we'll come back with more on that. But for now, we got what we have is short-term top in place at good resistance areas. Friday's action took out the key support and then bounced back almost to it at the close. So that sets up also the level at 12,400 on the Dow has been kind of pivotal. So those are the areas on the upside. If they do get above 13, we got 1320 5 half, 1326 half for the first area of resistance on Monday morning. If they fail there, we should come back down, test or break Friday's lows, and looking for that washout to set up a potential buying opportunity for a snapback. That snapback, if this plans out, will not take us to new highs. We'll have what looks like a 1, 2, 3 top on a daily chart form here. We get a bounce back, and then another wave of selling would really come after that and be a wake-up call here for another push to the downside. So that's what we're looking for on the short term. I'll come back to this chart real fast. Saying it bounces into this zone should be key on the upside. They have to get above this and then hold this area on a pullback just to get out of trouble here on the short term. So be watching this early resistance on Monday. If broken and held, can make a run up into this 1331, 30 to 31 area, which is about 4 points above. And that should be about all she wrote. Otherwise, one last third attempt to this area. And be very surprised to see that absent some kind of news. So that's our technical look here coming into the week of May 11th. Thanks for joining. If you haven't been to tradestalker.com and looked over the site, see what we have to offer, I invite you to come over. If you're a member, we'll see you tomorrow morning, bright and early. Have a good day.